But I'm sure bringing the light here too was better.
That's the fee.
As they brought the lights here, I think that was also
Yes, increases the brightness here.
No, I mean for it not to show you. But I'm sure it was with every zoom, you see.
Yes.
It's not like that. So you go live now.
Yes, it's live already.
So are they seeing you now?
Yeah, they can see.
So they are hearing everything.
Yeah, they can see. Someone is coming. This is the feed.
So this is YouTube.
Yes, this is YouTube. That's it.
So when you write, will they read properly by YouTube? Because this is 10.
You see that it has 10?
Yeah. Am I better here?
Yes.
Why is it 10 here?
That's the feed.
So this is ICA course. I don't know that somebody was here. So,
Okay. Hi everyone. So welcome to the live streams today. Very much excited for having you. It's been quite a long time. I see some of you already with some comments in the chat box, and we'll see and reply to your comments real quick. So welcome to the live stream. Always a pleasure coming your way. We break a little bit because we had to re-strategize and relook at a couple of things so that we can get much prepared well to create better content for you guys to be able to prepare well for your examination. Thank you already. I see some of you with a thumbs up on the video. Thank you very much. That helps us a lot and helps to grow the channel. So if you join the stream, smash the like button, let it turn to blue. And if you know somebody who has to be part of this live stream, comment and then share the video with them so we can reach as many students as possible. But most importantly, I would want you to comment in the chat box. Maybe share with me as well. For those of you who have checked your results, by now everybody has checked these results, right? How did your results go? What are your plans for November 2020? Remember the exams for November 2020 is on the 30th of November. I think from 30th November to 4th of December 2020 for the exam. So share with me in the chat box, how was your results and what are your plans for November 2020 real quick as we move ahead with our discussion. So let me see some of the comments coming in. Titus Slame said, when is financial management class starting? Said, tell me a topic in financial management that you want me to teach. So Titus, financial management topic you want me to cover on the channel, put it in the chat box for me. Once I have the topic, we will be able to design lectures so that we can come in live and cover content in relation to that. So Titus Slame, comment in the chat box what topics in in financial management you want me to look at. George Ampofo, I see you. You are welcome. You give me an emoji finally there. Yeah, Gabriel Kogu said, we are live again. Yes, Gabriel, we are live. George Ampofo said, guys, let's all show support by liking the video. Thank you very much, George Ampofo. I'm really grateful for that. Right, so thank you very much. I see some of you guys joining. Welcome to the stream. Comment in the chat box any questions that you have for me, what you want to share, you want me to share my thoughts on real quick. And most importantly, also, put it in the chat box what topics you would want us to cover as we continue with our discussion. Let's fix this guy here. Okay. Okay, so comment in the chat box any questions you have for me, whatever you want me to share my thoughts on. Inshallah, Peter, I see you. You are welcome to the stream. Good evening. I hope you're doing well and you are also studying as well. Richard Opoku Ajiman, I see you. You are welcome to the stream. Peter said it's been a long time. Yes, Peter, it's been quite a long time, but hey, we are back here to continue with our discussion. So it's good. We had to break a little bit and we are back. So let's continue with our discussion. Comment in the chat box any questions you have for me, whatever you want us to share our thoughts on real quick. And like I said, how was your results? You check for those of you who wrote the May 2020. How was your results and what is your plan? Or what do you plan for November 2020? Are you going to write? Which papers are you writing? So that I can provide you with some strategies on some of the things that you need to do. Emmanuel Lamte, I see you. You are welcome to the stream as well. So today we want to continue with our discussion and touch on some few things in absorption costing and then marginal costing. If you remember clearly prior to our long break, we were looking at absorption costing and marginal costing. We considered the various issues about classification of overheads and all of those things, absorption of overheads. And so we were dubbed to come and deal with the issues about how we prepare the profit statement or the cost statement using the absorption costing school of thought and the marginal costing school of thought before we went on the long break. But then we want to touch on that today and assist you with some understanding in that place. Now, note that this is one fundamental area when it comes to management accounting, and you cannot overemphasize it, because definitely there is going to be some questions around that, or the concept will be used some way, somehow for you to prepare for the exam. Victor Droko, I see you. You are welcome to the stream. Pius Ajiman, good to be back. Yes, Pius, good to be back. Give us a thumbs up on the video when you join, and then comment in the chat box any questions you have for me. So let's go straight up into the discussion, no wasting time. Let's see how much space I can have on my board. I don't know if I can have a lot of space coming in here. Okay, so let's see how that space division will work. So I have from here to here. Let's see, that could work. So we want to look at the profit statement. Then from the profit statement, we want to look at how we prepare the profit statement using absorption costing. Then how we prepare the profit statement using marginal costing. But first, I'm going to go through the marginal costing school of thoughts, so that we look at how we can prepare the question, or how we can prepare the financial statement using the marginal costing, and how we can do it in the absorption costing. I see a comment from Titus. I am writing my exams in December. I love important topics in this course, financial management. I'm currently studying investment appraisal, and if you can about profitability index. If you can, profitability index. Clarify your notes for me, Titus. If I get you right, more or less like you are writing an exam in December 2020, and you are studying financial management, and you are currently studying investment appraisal, and you are looking at the profitability index. Now, profitability index is one of the models that we use when projects are mutually inclusive and then they are divisible, mutually exclusive projects and divisible projects, meaning that we can invest in part of the project in that case. So clarify your question for me, then maybe I can provide you with a better answer there. Right, so let's go into it straight up. So profit statement. Remember what we did in the marginal costing school of thought. Remember I said also that the marginal costing is one of the fundamental concepts that we will be using when it comes to the preparation of, or when it comes to management accounting. Because when we are dealing with short-term decisions like break-even analysis, make or buy decisions, relevant costing analysis, limiting factor analysis, all of these concepts, we will be using the marginal costing principle. So it's very important for you to understand how the marginal costing principle works. But if you remember clearly, we made mention of the fact that when it comes to the marginal costing principle, the first thing we are interested in is contribution. And your contribution is equal to your sales, right, minus variable cost. Sales minus variable cost. Remember, we made mention of the fact that when it comes to the variable cost, we have both the production variable cost and then the non-production variable cost. In other words, you have to bring variable cost that relates to the manufacturing of the products, as well as the variable cost that relates to the administration, finance, distribution, and all of those things. So the first thing we are interested in when it comes to dealing with the issue about marginal costing is contribution. Now, from the contribution, the next thing we look at is the net profit or loss. Because in the marginal costing, we said that it is where variable cost is written, variable cost is deducted from sales, and all fixed costs are written off. So in the net profit or loss, we're going to bring our contribution, okay? Then we will subtract all fixed costs. All right? So the fixed cost here, we mean both production fixed costs and then non-production fixed costs. So you've got to be careful about that. So primarily, number one, we are interested in contribution. Note that contribution is sales minus variable cost, or selling price minus variable cost. Remember that the variable cost you are bringing here includes both production variable cost and non-production variable cost, and that is very critical. That is very, very important. So arming yourself with this school of thought, with this understanding, let's put together the pro forma of how we can prepare the profit statement using the marginal costing. So profit statement using marginal costing. So profit statement using marginal costing. What kind of marker am I even on? Okay, I see a comment coming from Emmanuel Lamte. He said, I will start soon. My final part of the 4th year, so I'll be watching past videos soon when I start. Oh, okay. Okay, that's fine, Emmanuel. That's fine. So in the marginal costing school of thought, we're going to work with 2 cash columns like this, okay? So we're going to work with 2 cash columns. Then as always, we're going to bring the sales up, okay? Then we will less marginal cost. Marginal cost, or sometimes it is called variable cost, okay? Marginal cost or variable cost. Very important about that. Marginal cost or variable cost. So there, we'll bring our opening stock, okay? Then we'll bring direct material, direct labor, so we can get prime cost. Then this is where you got to be careful. This is where you got to be careful. You got to be careful because you are dealing with marginal costing. And like I told you, we are interested in only variable cost in the first place because we want to find what the contribution will be. So after the prime cost, what we're going to bring is the factory overhead. So add factory overheads. But the factory overheads we're going to be bringing here will be the variable factory overheads. So when we add that to it, we get a factory or production cost. Okay, factory or production cost. Augustine Amoating, I see you. Good afternoon. I hope you are doing well. Welcome to the stream, and give us a thumbs up on the video when you join the stream. I see some of you guys joining. Give us a thumbs up when you join the video. That way we get more engagement on the video, and YouTube will be able to push the video so we can reach as many students as possible. That is what the YouTube algorithm wants. So help us smash the like button, let it turn blue so that we can together reach as many students as possible. So let's go. Once we have the factory or production cost, see some comments coming in. So once we see production cost, we will less closing stock. But we need to value the closing stock. Okay, you need to value the closing stock. So you must determine the value of the closing stock. Now, how do we determine the value of the closing stock? Very simple. We're going to bring, so I'm going to put that here. Like I'm going to put it here and I'm going to clean it in a moment, like for YouTube. So value of closing stock. So we say that the closing stock will be equal to unsold units. Okay. That is still not seen. Let me put it here. So, value of closing stock. And I'm going to claim this in a moment, okay? we bring unsold units divided by units produced times the factory cost. Okay, the unsold unit divided by the units produced times the factory cost. The factory cost or production cost. So that is how we value the closing inventory. Now, you're going to be doing these workings for both absorption costing as well as for marginal costing. All right, you're going to be doing the same working for absorption costing and marginal costing. So you're going to be on the lookout for on how you can work these things out there in that case. So that is the valuation of the closing stock. Now, when we say unsold units, it's just unsold units. What do we mean by that? So for instance, during the year, we produced, say, 20,000 units, but then we sold only 15,700, okay? So the unsold unit is going to be 4,300. So what is the value of that 4,300? That is the closing stock, and we must value it. So under marginal costing, the closing stocks are valued at the variable factory cost. Please get this very well, at the variable factory cost. Now, what is the meaning of that? It means that when it comes to the factory overheads, you realize that we are bringing only the variable factory overheads. Fixed factory overheads is not brought. It is nowhere to be found because we don't bring it. Are you getting the idea? We don't bring it. So once we do use these workings and we will get our closing stock, we less it out from it. So I can claim the valuation of the closing stock. So you can put this down and then we will now get that is the marginal cost. So you less this. Follow me carefully here. Follow me very carefully here. So you're going to less the marginal cost from the sales figure. Let's bring it a little bit. And that will give you factory margin. Now, why is that factory margin? Why? Why do we call that factory margin? Simple. We call this factory margin because so far you will agree that we have dealt with only factory issues. So if in the question we have other non-production variable costs, we will bring it. Okay, so non-production variable cost will be brought here. So non-production variable cost will be less. My space is already exhausted here, but when we less that, then we will now get the contribution. Okay, when we less that, then we will now get the contribution. So that is what you need to understand when it comes to. Now, when we say non-production variable costs, we mean things like selling and distribution, administration overheads, showroom overheads, finance costs. If they are variable, then we bring them here. If they are variable, then we bring them here. That's what we're talking about. If they are variable, then we bring them here. So once we less the non-production variable overheads from the factory margin, we get contribution. But like I'm saying, if you don't have non-production variable overheads, then where you see the factory margin will be the same as the contribution for the organization in that case. So that is up to the first slide, how we prepare the the marginal costing profit statement. So put it down, and then I'm going to give you some few minutes, and then we continue. Adibi said, enjoying your lectures, highly refreshing. All right, thank you very much. Titus said, plus financial management strategic plan on how to pass the subject. Financial management strategic plan on how to pass. Now, for financial management, so as some people are writing, let me share some thoughts on Titus CIMA question. Now, if I mention your name wrong, you forgive me, okay? So let me share some thoughts on Titus CIMA's question as you guys write it down and we continue. And you follow me on Instagram as well, because the meeting details for every day will be posted on my Instagram page. So you follow me on Instagram if you are not following me yet. And these will also be shared on Instagram. Victor Droko said, please, can you explain the valuation again? Okay, so let me do that here, Victor, for you. I'm putting it in this box. When I finish, I'm going to clean it. So the way we value the closing stock is, the first is, so valuation of closing stock, unsold units, okay, divided by the units produced, times production or factory cost. That is the production or factory cost from here. So the idea here is that when you produce, at the end of the day, let's say we produce 25,000 units, okay? But then for some reason, we sold only 15,000. That means that we've not sold 10,000 units yet. So the question is, what is the value of that 10,000, of those 10,000 units, which are our closing stock? So the way we value the closing stock is by bringing the unsold unit as the numerator, divided by the total units we produce for the period, and then you multiply that by the factory overheads that you are bringing, you had here. But remember what I said, in the marginal costing school of thought, we are valuing closing inventory at variable factory cost. And this is not an acceptable method for tax purposes. It is not an acceptable method for businesses, because the acceptable way, according to IAS 2, accounting for inventory, is the absorption costing school of thought, where inventory will be valued at full factory cost. Nonetheless, this is one of the approach that we use in relation to preparation of the profit. So basically, that is how we value the closing inventory. So Victor, let me know if it is clearer now for you. Then Titus, you were asking about, okay, Victor said, okay, that's good. So you were asking, you're welcome. Titus, you were asking how to pass financial management. Now, financial management is one of the subjects that is very simple to pass, because basically you know the areas that are going to be examined, and each part of the syllabus will be examined. So to increase your chances of passing the financial management exams, there are core topics I want you to make sure you focus on. Some of these topics include the following: sources of revenue. It's very important. There are going to be questions on that, either short-term, long-term, Islamic finance, all of those things. You make sure you know that. Number two, the issue in relation to cost of capital, because once you are dealing with sources of revenue, then sources of funding, then cost of capital will also be in the picture. So cost of capital, another critical aspect, how you calculate the cost of equity using the dividend valuation module, calculate the cost of equity using the capital asset pricing module, understand those concepts there. Then you come to the issue about business valuation. Certainly 9 out of 10, there will be question on business valuation when it comes to financial management, irrespective of the kind of exam that you are writing, there will be something on business valuation. So you have to look at the various methods that are used in valuing businesses, such as the asset valuation module, the price earnings module, the dividend valuation module, the earnings yield module, and then the free cash flow module. All of these modules are ways that we value our businesses. So you must know when to use which method and how to place value on various businesses. Then investment appraisal, regular. That is what you are currently looking at. It's a fundamental aspect when it comes to financial management. So you need to understand all of the methods of valuation of projects, such as the NPV, the accounting rate of return, the internal rate of return. Note that another name for the internal rate of return is the break-even rate, because the internal rate of return is the rate at which the NPV on the project will be zero. So that is a method that you need to understand. The payback period and then the discounted payback period. All of these things are methods that you need to know. Then dealing with the risks in projects, sensitivity analysis. It is something that you need to consider as well in that case. Then certainly you come to the final aspect, the la creme segment, which is my favorite topic in financial management. That is risk management, forex currency, risk management, hedging of forex exchange, using the issues like invoicing in home country currency, money market hedge, netting off, matching revenue against expenditure, and all of those methods in there. So you could see that I have actually gone through the entire syllabus. It means that each session of the syllabus, there is going to be a question on it, and you have to be on the lookout and make sure you practice a lot of questions, understand the principles very well, then you will be able to excel in the exam. So titles, CIMA, that is what I will tell you. Make sure you work a lot on those topics. Make sure you understand the fundamental principles and practice a lot of questions. Practice a lot of questions. If there are certain specific topics you are struggling with, which you would want me to cover on the live stream, you can put it in the comment box for me, and I will be making a live stream video or shooting a video on it for you so that you can prepare well for the exams. All right, so that's it. I see some of you guys joining. If you join the stream, consider to give us a thumbs up on the video. If you're watching the video and the thumbs up is still not blue, I mean, what are you waiting for, man? So hit the thumbs up button so it turns blue. That way we get more engagement on the video, and the YouTube algorithm will be able to push the video so we can reach as many students as possible, so we can assist a lot of people across the country. Yep, thank you very much. I see some of you smashing the like button. Thank you very much. Right, so let's go back. Okay, so Victor, you said you are okay here, so let's go. Now, after we get our contribution, what do? We write off all the fixed costs. Very simple, right? So once you get your contribution, you write off all fixed costs. So I'm going to just flip it over and bring it up. So having your contribution like this, then you less all your fixed costs. Remember, the fixed cost that you are lessing here includes all of the fixed costs. That is production fixed cost and non-production. So the production will be brought, the non-production too will be brought. You add it up, you bring it in, you lessen from the contribution, boom. That is your net profit or loss. If it is positive, it is profit. If it is a negative, it is a loss. So this is how we prepare the profit statement in the marginal costing school of thought. The key word is this, that we bring sales and less marginal or variable cost. You bring sales and less marginal or variable cost. That is very, very important. I cannot overemphasize that, and that is very, very important. So that is how we prepare our profit statement. So add a top up to it, and then let's look at the real deal, which is something that students struggle with a lot. That is the absorption costing. Any questions, please put it in the chat box for me, and I will answer your questions for you. If there are any things you want me to share my thoughts on also, put it in the chat box. I'm reading all of your comments live, and I will be replying to all of your comments, all right? So Sika Williams said, Good evening, sir. You are indeed a lecturer for all students, and indeed, your name say it all. Thank you very much. Oh, Sika Williams, you are welcome. You are welcome. It's always a pleasure. All right. So can we go now? That is marginal costing. Very simple. No skirmishing, no nothing there. Boom. It's very straight up. Now let's look at how the profit. Now, if you have any questions, please don't hesitate. Put it in the chat box because, like I said, I'm reading all of the comments from the chat box and I will be replying to all of your comments. If there is something you would want me to go over again, don't hesitate. Put it in the chat and I'll be looking at it as well for you. So let's go to how we prepare the profit statement using the absorption costing. And I want you to stay with me carefully on this one because there is something that we will be talking about in a moment, and that is the concept of, how do we call it? Over absorption and then under absorption. So you want to stay with me very well on this one as we navigate through it. So let's wrap this guy up. Let's see if we can get 2 slides here. Want to make sure that I'm not going to squeeze up a lot, but let's see if we can get 2 slides. This is too big. Okay. Then here. Let's see. Now let's go. In the absorption costing school of thought, as you may know already, and I told you already, we are valuing inventories at full factory cost, meaning that everything that has to be included in the cost of the product is going to be included when we are dealing with the absorption costing. But like I mentioned a few minutes ago, it is important for you to understand how to deal with the issue about over absorption of overheads and then under absorption of overheads, because immediately the examiner asks you to prepare the profit statement using the absorption costing. One of the things that must be at the back of your mind is the concept of over absorption of overheads or under absorption of overheads. In marginal costing, we don't think about that. We don't even care what the overheads are. All we think about is which are fixed, which are variable, and that is the base for our classification. But in absorption costing, the game is going to be slightly different. So let's look at the pro forma on how we prepare the profit statement using the absorption costing. You ready? Let's go for it. So let's see how we go for it. Slashing our 2 sides currency column. Oh, that is way out, I guess, on YouTube. Let's see if we can come down a little bit. Yep. 2. So 2 cash columns here. Remember the heading is profit statement using absorption costing, all right? Profit statement using absorption costing. So let's go. Sales. Definitely sales will be in the picture. So let's bring it in. Sales. All right. Now, once you bring the sales, the next thing you bring is less cost of sales. Stay with me carefully on this. So we less cost of sales. Now, in the cost of sales, the same things we listed in the marginal costing will be listed here. So the opening stock, the direct material, the direct labor, prime cost, variable factory overheads, the same thing will be listed here. But we're going to add an icing on it. So let's go. So we bring an opening stock. So what the heck that is, we bring it up. Then we bring the direct material. Then we bring the direct labor. We add that up. Now remember, if there is direct expenses, this is just a pro forma. So if there's a direct expenses, you could bring it in. Then we get a prime cost. Now, once we get a prime cost, the next thing we need to add is what? Add factory overheads. So we go add factory overheads. Remember that in the marginal costing, the factory overhead addition, we brought only what? The fixed, sorry, only the variable. But in absorption costing, we will bring both the fixed factory overhead and the variable factory overhead. So let's go. Variable will be brought, fixed will be brought. Why? Because in absorption costing, we are valuing inventories at full factory cost. In absorption costing, we are valuing inventories at full factory cost. So let's go for it. Now we will get our production cost or factory cost. Okay, production cost or factory cost. So once you have your production cost or factory cost, what do? You less closing stock or closing inventory. So you less closing inventory. Remember that again, you're going to be valuing the closing inventory like we did in the marginal costing. So the same pro forma will come here. So the closing stock valuation is going to be equal to the unsold units divided by units produced times production or factory cost. Okay, times production or factory cost. That is the concept there. So it's the same thing, but remember, in absorption costing, we are valuing inventory at what? Full factory cost. Because if you remember in the marginal costing, the fixed overheads wasn't brought. But in absorption costing, we bring both the fixed and the variable overhead. So once we do that computation, we less it from the production cost. That is what gives us the cost of sales. We less the cost of sales from the sales figure, and that gives us gross profit. That gives us gross profit. Any questions for me? Okay. So that is how we derive the gross profit under the absorption costing. Now, immediately you get to gross profit, don't be happy. Immediately you get to gross profit, you need to ask yourself, have we over-absorbed overheads or under-absorbed overheads? This is very, very critical. This is very, very critical. Now, how do you know if you have over-absorbed overheads or under-absorbed overheads? I'm going to come to that in a moment, so stay with me. So I'm continuing the pro forma from here. You're going to bring your over or under absorption of overheads. If it is over, we are going to be adding it back to the profit. If it is under, we're going to be subtracting it from the profit. Like I said, I'm going to illustrate to you how we determine whether we have over-absorbed or under-absorbed. Then after that, we less non-production overheads. Note that here, the non-production overheads we are lessing includes both the fixed non-production overheads and then the variable non-production overheads. So we could bring that to the first column and take the total to the final column, and then we'll take it from there. And that is what gives you the net profit or loss. If it is positive, profit. If it is negative, that is going to be a loss. So this is how we prepare the profit statement under the absorption costing school of thought. Any questions for me, please? So I'm putting the heading down here or up here because I'm going to post this on my Instagram page as well, so that for those of you who are not able to write or something like that, you could see it on my Instagram page. And also note that where we, in case you want to listen tomorrow, you just follow me on Instagram, because in the morning that will be posted on Instagram and you'll be able to get a notice. Any questions, please put it in the chat box for me. Suwilanji Wenya. If I mention your name wrong, forgive me, okay? Suwilanji Wenya, I see you with a thumbs up in the chat. Eric Asumenin, I see you. You are welcome to the stream. Give me a thumbs up on the video as well when you join. So finish, and then let's look at the over or under absorption of overheads thing. So what is the difference between marginal costing and absorption costing? Simple. In marginal costing, inventory is valued at what? The variable cost. But in absorption costing, closing inventory is valued at the full factory cost. Richard Opoku-Ajiman said, please go over the over and under absorption again. Yes, I'll be going through that again in a moment. But what I'm saying is that I'll be going through that in a moment. So I just want you to finish and I'll go through that well. If overheads are over absorbed, you're going to be adding it back to your gross profit. If they are under absorbed, you're going to be subtracting it to the gross profit, from the gross profit, sorry. And like I said, I'll be touching on that in a moment. So Richard Opoku-Ajiman, stay with me. I'm going to go through that right now. Okay. Now, so how do you know overheads are being over-absorbed and overheads have been absorbed? How do you know that? To know whether overheads are over-absorbed or under-over-absorbed, we're going to be considering some scenarios here real quick. So let me just open my slide on that real quick. So what you start with is that you're going to be comparing your actual overheads against the absorbed overheads. And then if the actual overheads, they have done it, okay. If the actual overheads is more than what you absorb, that means that the overhead has been under absorbed. But if the actual overhead is less than what has been charged, that means overhead has been over absorbed. So let's go through how the rule actually works. So I'm going to dictate a simple scenario up, and then we look at it. So let's see. Pembridge Co. has a budget production overhead of $50,000 and a budgeted activity of 25,000 direct labor hours. So let's take that again. Pembridge Co. has a budgeted production overhead of $50,000 and a budgeted activity of 25,000 direct labor hours, and therefore a recovery rate of $2 per labor hour. Required. Calculate the over or under absorption and the reasons for the under or over absorption in the following circumstances. A, actual overhead cost is 47,000 and 25,000 direct labor hours are worked. Now, so stay with me carefully here. Let's just put the pieces together. So what we have here in the question is very simple. The company has budgeted overhead of, so you know the starting point is to calculate the overhead absorption rate. So the overhead absorption rate is going to be a total overhead of $50,000 divided by the labor hours of 25,000 hours. So that gives us an overhead absorption rate of $2 per direct labor hour. Okay, that is the overhead absorption rate, $2 per direct labor hour. Now, we are told that in scenario A, stay with me carefully, the actual overheads incurred was $47,000 and the actual direct labor hour is 25,000 hours. The requirement is for us to calculate whether overheads have been over-absorbed or overheads have been under-absorbed. So how do you determine this? So stay with me carefully here. So A, the name of the company is Pembridge Co. And I'm actually dictating this question from my book on management accounting. So just copyright issue, that's why I'm saying that. So I'm dictating the question from my book in management accounting. So Pembridge. Now, what is the actual overhead? So let's look at the actual overhead. So the A aspect, the actual overhead the company has incurred is 47,000. So actual overhead is 47,000. Now stay with me carefully. They incurred an actual overhead of 47,000, but how much overheads did they actually absorb? Based on the overhead absorption rate, we would have absorbed overheads of $2 times the number of hours they had, 25,000. And that gives you what? $50,000. So the actual overhead incurred by the company was 47,000, but we absorb an overhead of what? 25,000. So this tells you that we have what? Over-absorbed the overhead by 3,000. Are you getting the scenario here? Richard Opoku, make sure you stay with me on this one because I think you were asking a question about me going over that one in that case. So that is the idea about that. Because if you check closely, you realize that we have incurred an overhead of 47,000, but based on the overhead absorption, when we are bringing the fixed overheads, after we bring variable factory overheads, when we are bringing the fixed factory overheads, we will put 50,000 there. But that is not how much the company incurred. The company actually incurred 47,000. It tells us that overheads has been what? Over-absorbed. So if overhead is over-absorbed like this, that extra 3,000 will be added back to our gross profit. That extra 3,000 will be added back to our gross profit. Look at the second scenario. 2B. Actual overheads is $50,000, and then actual hours is 21,500. Actual overheads 50,000. Actual hours is 21,500. Now let's look at this one, whether overhead has been over-absorbed or under-absorbed. Now, immediately you see that there's a trick that you must have to guide you sometimes to determine whether overhead has been over-absorbed or under-absorbed. So if you look at it, the budgeted hours was just 25,000, but the actual hours worked is 21,500. So immediately the actual hours is more than the budgeted. It tells you that overheads has been under-absorbed. Now let's look at it and see how it goes by. So B. So actual overheads is $50,000. But then let's look at how much that we are going to be absorbing here. 21,500. So let's see. So absorbed overheads. So $2 by 21,500. So $2 by 21,500. Let's punch that out. I could do that. That is 43,000. I don't need to punch this one out. 43,000. So what is happening here? Based on the absorption rate, we absorbed 43,000, but the company actually incurred a cost of what? 50,000. So here it tells you that we have under absorbed the overheads of $7,000. I hope you are getting the idea. So this is how we deal with the concept of under absorption of overheads, over absorption of overheads. Under absorption of overheads, over absorption of overheads. Now let me look at the last one for us. So see, what if we have actual overheads to be 47,000 again, but here the hours is 21,500. So actual overheads 47,000 again, but the actual hours is 21,500. So here you will realize that again, overheads will be under absorbed in that case. So Richard Opoku box, do you understand the concept here of over and under absorption of overheads? So like I was saying, okay, so Richard Opoku has given a thumbs up in the chat. So meaning that you're good on that. That is awesome. That is awesome. Okay, so that is what you must understand when we talk about dealing with the issue in relation to over absorption of overheads, under absorption of overheads, and absorption costing. So please note, immediately you get to gross profit, you must ask yourself, have we over absorbed the overheads or under absorbed the overheads? If overheads are over absorbed, you add it back to the gross profit. If overheads are under absorbed, you subtract it from the gross profit. So the only thing I want you to know is, okay, how much was charged, how much was incurred. So if you look at the charge and incurred, and that is the rule for comparison. So if you actually incurred 47,000, but you're actually charging 50,000, then you have over absorbed. If you're actually incurring 50,000, but you absorb 43,000, then you have under absorbed. And that will guide you in relation to how you determine whether overheads have been over absorbed or under absorbed. So that is it about dealing with the marginal costing and absorption costing. And I'm going to be concluding around here today. So let me know in the chat box if you have any questions for me. God willing, tomorrow we will touch on something else. Either we're going to look at a practice question on the absorption costing and marginal costing. I'm thinking through it so that we can practice a question on that. But like I said, you can follow me on Instagram, and then the meeting details will be posted on Instagram. What we'll be covering tomorrow will be posted on Instagram, and you can follow me on Instagram and get the notification for that. So thank you very much for joining the stream. It's always my pleasure coming your way and assisting you and providing you with some tips. Continue to join us 4:30 p.m. Monday to Friday, as I'll be teaching live like this, and also we'll be answering any questions that you are having. Follow me on Instagram for the meeting details. We will also be posting excerpts of this lecture on our Instagram page as well as on our LinkedIn as well. So you can follow me on Instagram, get the meeting details as well there, and know whatever it is that we are covering. So thank you very much, and I will see you, God willing, tomorrow. Let's give some shout outs real quick. Titles: George Ampofu, Gabriel Koku, Inshallah, Peter, Richard Opoku, Ajeman, Emmanuel Lamte, Victor Droko, Solomon Ejiri. I think I didn't see you earlier. Solomon Ejiri, Augustine Amwatin, Akinyode Adibiyi. Forgive me if I break down your name. Sika Williams, and then Suwilanji Wenya, and then Eric Asumeni. Thank you very much for joining the stream. It's always a pleasure. I will see you same time tomorrow, 4:30 p.m. as we continue with our discussion. Remember, the ICA November 2020 exams is coming on from the November 30th to 4th of December. Make sure that you attend lectures. Take some time to attend lectures very well. If there are any details that you have, any inquiries that you have, you can reach us on 050-114-9296, 050-114-9296, 050-114-9296. So any inquiries you have, maybe you want to join our online lecture, our Zoom session, our online study portal as well, and study directly under my mentorship for the ICA November 2020 examination, you can call this number. If you're outside Ghana, you add +233. That is the country code, and then you can reach me up, and let's see how I can assist you so that you can better prepare and pass your exam. So 050-114-9296, 050-114-9296. So I'll see you same time tomorrow as we continue with our discussion. Continue to study, continue to work hard, and most importantly, continue to pray and stay healthy. Bye-bye.